Hey guys, how are you? Yep, we're going to be doing a bear call on US indices, and this is the current state. It sounds a little bit expedient. We've been talking about it internally in our own environment there by the Sniper Circle premium area, and this isn't the one that we like best. But it looks a bit expedient because we're clearly selling off now. But you've probably all realized we had our first serious sell-off here. You've had a bit of a reinflation rally, and now we're going a little bit pee off the roof, and you've just run the low there on the Dow Jones Industrial Average. This is not our most favored, as I said. I'm starting off with the Dow. That's a popular one. This is a broadening structure. You bounced up to the splitter there. You could have got short a lot earlier. You could have got short up there if you wanted. You could have got short on the takeout of that level, and you could also get short at the takeout of the low, which is quite late now in terms of how I see everything. But that's enough move, and you've been expanding to the upside in terms of this. And yeah, it's looking pretty bearish, but that's not the one we want to talk about. So let's go across to some of the other indices. Now, more specifically, you're getting some structure. So how about we take in the SPY? By the way, we've said before, just before I leave this, I'm passing it as I'm going by. I may as well just drop in. We gave you HARKK as a short and said it's going to continue to fall. You could have got a short up top here. There was inverted. You could have been short in the 70s as well. This continuation pattern, another option to get short. Puts would be serving you very, very well on what is an absolute spiller. And again, whilst we're not excessive Elliotticians, this was sort of an extended, and now you're in a substantial down leg. You have had mini, so this larger structure is like a 3, but you have had within that further little mini extensions, which we've observed there, and you're starting another major leg. I don't think it's over for Cathy Wood. I really do think she's going to get a beating. And you know, I'm not wishing it on her, but I think her trading and the time and where we are now, she's not made the right calls in that one. But it's indices we're looking to talk about, but we take in HARKK as I go past it on the list, because that was opportunistic, and I was discussing it this morning in a number of places. So let's take in the SPY. That's who I was looking for. So if we just take in the SPY, wow, we are rolling over. It's even moved during the course of this day. I was looking at it. This is a head and shoulder, and this is the one that's more interesting. And actually, when we were talking about it over here, and then at the neckline, it's now rolling quite nicely, offering a 380. Now, the interesting thing about head and shoulders, that of course it's not just the target, it's a cyclical reversal typically. Now, I want to also give you a bit of a warning. Head and shoulder callers, particularly on the US indices, it's a widow makers club generally, but I do, once again, famous last words, feel that this is particularly different. There's a deflationary shock coming. I'm expecting oil to come off. We'll cover maybe a market sniper video on that. We've been discussing it internally in our community for quite a while. So there's some great trades setting up, and I do assess that deflation will be coming pretty soon. And we haven't even had the first interest rate rise. So that's a triggering event for what is a head and shoulder. That's around 380. But I just want to take you out on the time frame a little bit and highlight why we are so bearish. So our friends with stocks, especially with American stocks, could be finding that there's quite a nasty sell-off. This was events of March 2020. That was a substantial sell-off, as you're aware. Were you to have something of a similar scale, it would be pretty painful. So it would go beyond the reversal. That's a 2-day, so I've taken you up from the 1-day to a 2-day. Let's just roll over to the weekly and just give you an idea of why. This is why I don't think the juice is particularly interesting. It's about 1.7, and in actual fact now you won't get that because the market has already moved. So if I'd have to put the entry there, the stop would go up to the right shoulder and the target comes back. You're dropping now to barely a 1:1. However, the difference is this could be a bigger fall than most people realize. You've been up, up, up. This is a big trend change of this move out of that broadening structure. You broke it there, and you were in a tightening, climbing, grinding higher, and now you've got this. It's quite feasible. You could have quite a substantial. It's just how big and how far dare you go out. I'm going to take off that risk reward, which is barely 1:1, and say, well, it depends how big this is. If it's Klaus Schwab's long-awaited hack, where everybody's accounts get nearly zeroized, it could be exceedingly ugly. And guess what? They'll own everything, you'll own nothing, and you'll expect it to be happy. You will be on the meds that they'll be giving you, stuffed with opiates. They are, after all, the main opium sellers of the world. And I'm sure they'll bring it to the fore again, getting you addicted to your metaverse and your pay-to-earn gamer world. But anyway, let's not get too reset for you. Down, 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 down. I mean, it's not beyond the realms of possibility that you could bounce on this broadening structure over here, 329, 330s. And you could, if it's a super big one, you could have an even bigger fall. So we have to remember what March 2020 was, 338 down to 216. It's a pretty handy more than 30%, or 33%. So, if you were to fall 33% again, let's say it's just the scale, and it was a substantial scale as alone, but from 480, you're going to drop a third, you're going to be losing another 160 odd pips off there. It would probably bring you right down to 320 odd, which could see you back down here as a correction. That could be huge. That's not to say it will happen, but just in real, normal, monthly time frames, these are your climbs. There's a green climb and a correction. You then had a decade, that's right, 00 all the way through to 13 before you took out the highs. That was a decade of sideways. So now you've accelerated. You had this broadening structure that we were illustrating. You broke out there. This has just been a steepening. The next green line that I could have, should have, would have drawn, let's just clone this guy, goes in here from the lows, and it's just got steeper. By the way, in an inflation game and a stimulus game, we are net long indices generally at a macro level. We just think shorting can be pretty handy if you catch one of these periods where you have a sell-off like that, even that, certainly that, and possibly what's coming here. And that just means you get in with capital preserved, possibly some additional profits, and you eventually get to go macro long again, but this gradient just keeps getting steeper. And this is your debt experiment of the cartel and how it's going at the moment. And that is just a huge move. You've got to remember you've come at to 221 up to 480 in 2 years. Let's say that again, 221 to 480. You've had a more than doubling on a major index inside of 2 years. Wow. But that's what 7 trillion of crazy money and funny money does, chasing into assets. So that's a quick one for you, just a little look on the indices. We may do something for you on energies later, but I'll just keep it simple there. So we dissed on Cathy. We've highlighted how you want to be bias short there. It's not a chase in now though, but look for any rallies. I do suspect that there's more legs to come. She's just very badly, super exposed. She's literally got her head in the ground and her backside up in the air, waiting for a proper kicking, just in terms of how she set up stall for what is actually now the cycle here. She got caught out, I think, with how things turned inflation. No one is buying the exponential story at the moment, even though it will be correct and will come back into season with the great fundamentals and a new stimulus package and everything that will likely follow this. She just got out of sync with the cycle. Okay, that's a short update for you. themarketsniper.com to book a call. We will, in fact, key point, be doing a Panama event. Everyone who's a Trading Metamorphosis member will also be able to attend physically and be present in our Panama event, which will be over 2 days. And not only will you get all the pre-recorded content that takes you from beginner, advanced to top-end sniper gunner, and all the community interaction and the updates and the other members. You'll be able to attend that event as well, and meet some of the other guys that are on the program, meet myself in person, and have your questions answered in person. Pretty awesome, and we will be recording it as well, so it can be reviewed and will be kept in the sniper circle. Whilst out there, by the way, you can also kick the tires on your reset defense for this reset season and everything that's entailed in it. And I would say that's certainly something you should be thinking about if you aren't already. Anyway, that's it. Links are all below. Pure gold for securing gold. One of the few things that I think could hold its own and even grind up during the correction. Although if it's a very vicious one, you could find most things go down. And also, long run, physically to hold. Don't have the fastest horse in the stable. Have a stable of horses so that you have a multitude of options. Don't be totally exposed to crypto. Don't be totally exposed purely to gold. Having some of the equities, once they've turned, the great assets will also indeed perform pretty well. I didn't look at NASDAQ, so before I sign off, I'll take a run past NASDAQ. It's not in the neatness of structure that the SPY is at the moment that we've just shown you, but nonetheless it is an interesting index, and it's one it would be slightly remiss not to take a wee peek at. So let's see if I can locate that. There we go. Get it next to the SPY. NASDAQ throwing it down hard today, guys, throwing it down hard. Cathy Wood's ARKK, ouch, ouch, ouch. There's it. There's how it rolls. That was your broadening structure. You fell out the bottom. This is a nasty spill. Doesn't have the tidiness of the head and shoulder structure, but actually, in terms of valuation, the growth narrative could be even harder hit. But you must generally trade your best pattern, is my viewpoint. But looking pretty ugly and slipping to the downside. And that is why it's not a great environment for risk on generally. And while Bitcoin is getting a little bit of a reinflation, most risk on assets are going to be in a very, very tough time. And I'm going to start to see the likes of the FX emerging currencies running into trouble again. A bit more flight into dollar. The dollar's been relatively benign after a strong period. It's been a little bit up and down. Euro starting to show real stress. That's good for the dollar strength scenario, and it's good for the fear and loathing scenario, which is pretty much how we've positioned ourselves. Not a very popular position, but unfortunately these are seasons, and every now and then a winter comes. Anyway, with that all said, we'll see you book a call to see if you can qualify to play with us in the community, and then join us potentially in Panama in person, and we look forward to if that's the case. Otherwise, just give us a like and a share. We appreciate having you here anyway, nonetheless, and I may be coming back at you as to why, despite being a long run macro energies and commodities bull in this deflationary period, I do think that we could be getting to a point where the oils are a little bit toppy, and a potential trade might be setting up there. Till then, I'll catch you next time. Thanks for watching.